Welcome back to the ETF Inspector. It's Sunday, July 13th, around 1 o'clock in the afternoon, and this will be our video for the week look ahead and payment distribution guesstimate for YieldMax funds ULTY and LFGY. Those are the Ultra Option Income Strategy Fund and the crypto portfolio and crypto industry and tech portfolio option income fund. In this video, we're going to go over this is the long form video, right? It's the weekend, you got a longer time, you're not looking for the short and sweet of what happened today. We're going to talk about the updated IVs, the weighting. We're going to look at how many or how far in or out of the money our options stand for the week, and then we will look at we won't go through all the trades because we've done that on an individual basis, but we will come up with our guesstimates for what we're going to be getting paid this week. All right. And as always, just a reminder, if you're on X, formerly Twitter, I am too, at ETF_Inspector1. Just put out posts when the videos are airing for the most part. Other than that, I'll repost things like YieldMax announcing, declaring their payments, or I started covering Round Hill funds, and I let you know how the single day trades that they make go in case you want to trade along with them. All right, so we'll get started. Like I said, this is the longer, much more in depth. So the short and sweet people don't necessarily want this, but the people that want every detail, here's the one. You got plenty of time to watch it before the market opens Monday at 9:30. And of course, at the end, there's a dad joke if you stick around for it. So let's get started. ULTY, for starters, ULTY runs a collar strategy for the most part. There are a handful that they play differently, but in general, I'd say 90% of the time, you've got ownership of shares and then selling calls out of the money as a way to generate income, and buying puts also out of the money, but on the lower side as a protection against share price drops to keep them from dropping the overall fund substantially, right? So quick example, right? They've got a put here at $24 for this individual stock with the stock at 28. So it's not to say it won't go down if stocks go down, but it's kind of protected against catastrophic loss. And at the same time, it doesn't have to get to 24 before that put starts becoming more, what's the word I'm looking for? Valuable. That's it. So as the price drops, that the price of this will increase. So its value increase. It won't completely offset the drop until after it hits that 24, but on the way it will help. So, but anyway, we'll start. I like to start with the weightings and 30-day IV. So all of these IVs have been updated after. I always do it Saturday morning. So the market finished trading on Friday. So Saturday morning, it's the first no action day for the stocks. So they're not going to change their IV intraday or anything like that. So I like to use Market Chameleon. You might like something else. Not every website gives you the IV. Now, for example, like ULTY is a high volatility income fund, but ULTY itself is not high volatility, right? If you've been in ULTY for the last couple of months, we trade from 610 to 620 basically, maybe a little bit above, a little bit below, but in general, the stock moves about 10 cents total. So that's not very much volatility. That's why it's a 22. That doesn't mean within it's a 22. That just means specifically ULTY's share price going up and down. So I use that website, and let's get into it. Applied Optoelectronics, it's a mouthful, AAOI. 3.69% of our holdings are within that stock, and it is a 129.6% IV. That is an increase from last week. So like I said, I update these weekly because it takes a decent amount of time for me to have to sit and look up each one. So I do it weekly just when we're going to come up with the guesstimate. So that's up from last week, and that's a very nice one to help with our overall IV of the fund. App Lovin' is almost 5.5% of what we own in ULTY, and it's at 83.2. Still nice and high. That's an increase. I got a plus or a minus next to each one to indicate whether it went up or down, just in case I forget to mention it. AST Space Mobile's up to over 6% of our holdings, 92.2% IV, another increase. Coinbase up 5.5% of what we have. It's 67, not quite as high, but it still helps. First Solar, 4.4%. That went down slightly. I shouldn't say slightly. I can't remember what the number was, but to just under 58. Robinhood, as you guys saw, it was kind of on fire for a while, and then it cooled off. So while it's 7.4%, which is on the high end, generally most of these are in that 2.5% to 5% range, but Robinhood just increased in value so much. You can see we've got $71 million worth of shares, and that's a 71.4. So it has cooled off a little, and the IV went down from last Saturday. IonQ up over 5.6% with an 87.3. That helps. That's nice. LabU, that's the triple leveraged biotech. Only 2.5% of our money's in that, and that's at over 80. An increase from last week. Mara Holdings 5.8%, 75.3. That's an increase in the IV. MicroStrategy dropped not a lot. I think it might have been 51 or 52 to 50.4. That's 5.6% of our holdings. Oklo's over 6%. Another one that's been going up a lot lately, but has cooled off in the past week. So it dropped to 92. But hey, 92 is still above our average, so it's definitely helping our average. Palantir, almost 6% of our money there, 66.1% IV. That's an increase from last week. Reddit, 6.15% of our holdings. It dropped to 83.8% IV. Rigetti, nearly 5% of the money in there, 82.5% IV. That's a decrease from last week. SMCI, about 5.25%, increased to 72.8% IV. NewScale, 4.8% of our holdings, 101.6% IV. That helps a lot. That's an increase. Tempest AI, a little over 4.5%, increased to 78.9% IV. Tesla's has shrunk a lot. If you remember, we sold a good chunk of it. We still have some money in there, 2.7%. That has dropped to 54.7% IV. That's just until the next argument, and then they'll get volatile again. And then Upstart, 7%. That might be our highest. Did we say one higher than 7%? 7.4, Robinhood. So Robinhood and IonQ are our two biggest holdings, over 7% each, and 107.2% IV. That helps a lot. Now, we trade a couple other funds. We just don't own the shares, and those are VRT, VST, RH, and AMD. I have it on my list of questions for when I ever do get to interview. If you don't own shares but trade options in a stock, is the IV considered in the calculation? And if so, how would I figure out calculating that? So if I ever get to a point where I'm doing interviews with the fund managers, that's a question I'm going to ask, because I don't want to just make something up as a way to give you guys numbers. So for now, I just give you the IVs of the stocks that we hold, because otherwise I wouldn't know how to weight it. Obviously, I could look up the IV, but how do I factor it into the rest of them other than the weight of our money being in it? So all of those combine. I've got a formula here, and you just multiply the weight, the percentage weight by the IV, right? Because if you just averaged all those IVs, that wouldn't be a true average, because 7% of our money's in Hood and 7% of our money's in Upstart. That's, if you just averaged 107 and 54, you'd get the average between the two. But almost 3 times as much of our money is in the 107 than is in the Tesla. So that's why you need to weight the average, my opinion. So our IV for the fund that gets used as our multiplier for figuring out the distribution increased this past week, up over 81.02%. We like that. That helps with calculating our payments. Okay, So now we'd like to take a look at the options. Once all the roles and everything got figured out on Friday, we're now looking forward to next week and see how we stand on each one. So we don't really care. We're not talking about price increases and changes in values because it's a non-trading day. So we can just take a look at what our options are looking like. Applied optoelectronics, and we're only going to talk about the sold calls. The puts are just protecting us. If they end up becoming valuable, it's because the share prices dropped, right? That's not the scenario we're talking about because this is an income strategy fund. So the goal is to just sell options and make the money off of them. And we want to see what our chances are of winning those trades. So that's why we're going to talk about basically just the highlighted ones. So 31 is the strike price selected for this Friday. They got 12,519 contracts there. They're currently over 9% out of the money. Looking nice, almost double digits percentage out of the money. AMD is a little different now. So they have a debit call spread. So they didn't sell the close to the money just trying to generate that income. They actually are betting it's going to go above that. So they have bought, well, not go above that because it's already above that, but they bought 139s as the strike price calls, and then they sold 144s and 147s. When you do a debit call spread, part of the purpose of the purpose of selling the further out of the money is to just generate some income to help pay for the purchased calls instead of just purchasing calls. But what it also does is it kind of caps the amount of money you can win there. So we want to go above 139, which we already are, 146.42, and not quite stay below 144. The majority of our money's capped at 144, the rest at 147. But so technically, ideally, stock closing on Friday at 144 or 143.99 would be the ideal scenario because it would cost next to nothing to close these two out. You're going to have to buy to close there, and this will be at its max value to go along with that. Obviously, this would just keep on increasing in value if the stock just kept on going up, but these would as well. So best case scenario would be just under that 144. AppLovin, 3.7% out of the money. Expiring Friday, we're looking at a 347.50 with the stock currently at 335.10. There's a little bit of room to run there. Not a lot, though. So yellow, I've got a color coding system other than the blues, right? Well, these are all pertaining to selling of options. So we don't want them to be in the money. So in the money would be red. In the money means we're going to have to pay to close them out. Yellow is close to that, but still in our favor. So that's within 5% of danger. And then green would be greater than 5% out of the money. So we're further away from the strike and better chance of winning the trade. Okay. AST Space Mobile has selected 48 for their calls, 13,000 contracts. They're 5.3% out of the money. Coinbase, this one's pretty close. 392.50 was chosen with a 387 closing price on Friday. They're only 1.4% out of the money. Going to need them to trade pretty sideways most of the week, all the week. First Solar has two different strike prices selected. Everything's still for this coming week. About 10 times the difference, though. So we got 241 contracts at 170. It'd be great if the stock went to but didn't cross 170. That'd be our ideal scenario. But if we lose these, it's not the end of the world because we got 10 times as many contracts at 172.50. So the closer ones are 4.6%, and the further out are 6.1% out of the money. Robinhood sitting at 98. They've got two strike prices, pretty evenly split. 3,900 contracts compared to 3,300. They're at 102 and 106 again for this week. They're 3.7 and 7.7% out of the money. Best case scenario for us would be the stock increase but not cross 102. IonQ, So IonQ just had a real rough Friday. So these got rolled, and then the price just kept on dropping. So we are starting the week 12 and 14, almost 15% out of the money with these 47s and 48s. The closer one, though, is the 11,000 contracts compared to 1,700. So that we need to win that one. So we would that's lots of room to run, though. We can afford the stock to go approach 47, but not cross it. LabU, it's the triple leverage fund again, ended at around 65. We have 68 as the only strike for this Friday. They're 4.5% out of the money. This is where we start getting some red. We don't like to start the week in red. We don't want to get in the red at all. So they've got 3 different strike prices selected: 19, 1950, and 20. It wouldn't be the end of the world if we only lost the 19 because it's 2,200 contracts compared to 12,000 and 14,000. But best case scenario would be to finish just up below 19. We don't want to go way below 19 because then that turns into decreases in our overall value of our holdings. And again, it would help our puts initially, but we're not going to close them out for wins early on. So let's say it ended at $18. We'll be closing these out for pennies and closing these out for pennies. So that's not making up for the dollar plus loss in value at that point. But they are 0.7% in the money, 1.8 and 4.4% out of the money. MicroStrategy, also 2 strikes selected, pretty evenly split, 600-ish contracts on each, 427.50 and 445. Again, we are starting in the money, but that's a pretty high price compared to recently. So maybe they're just hoping it ran a little too much, but that's because Bitcoin had a crazy day. So if I don't follow Bitcoin over the weekend, so I don't know what it has done since then. But they're starting in the money 1.6% and then out of the money 2.4%. Oklo, just over 56. They have 57s and 60s sold for this week. Not even, but not really a multiple of each other either. 5,900 compared to 4,600 contracts. 1.6% out of the money. Like you said, less than $1 out of the money on a $50+ stock. And then roughly 7% out of the money. Palantir's got 3 strikes selected. They're 2, about 3.5 and 4% out of the money, with 145, 147, and 148. Stock's at 142, so we could afford for it to go up almost $3 and then win all these trades. Reddit, 145.59 was the closing price. They've got 149s and 150s. This is another one where it's not the end of the world if we lose the 149s, so long as we win the 150s. But we don't want to lose anything, right? So 500 contracts compared to 3,500, so it's 7 times the difference. They're at 2.3 and 3% out of the money, all expiring this Friday. Rigetti, they've selected 2 different strikes, but we need to win the first one. 1350, there's almost 38,000 contracts. At 14, there's 670. They are 10.8 and almost 15% out of the money, so we are sitting nicely there. There's should end in wins for us, but you never know. It could be one day into it and we lose them. RH, this is another one. We do not own any shares, but we do have an option strategy on it, and it is a debit call again. So we purchased the 190s, and then we sold some 220s and the rest at 227.50. So best case scenario would be the stock to end just under 220. It's currently at 207.52. So we are currently $17 to the good on these 190 calls that we've purchased. So as this increases, the value will increase. And as days tick away and it's not beyond the 220 or 227, these will become cheaper to close. Again, if you buy something, it has value. At the end, you close it out, you sell it, and you keep that money. If you start by selling something, you collect the money up front, but you're going to have to buy that back because you sold something you didn't have. You're going to have to buy it back to get back to net zero. So ideally, we want them to end worthless so that we sold them and collected some money for it and then buy them for cheap. Sorry for the people who fully understand this and have to keep hearing that explained, but there's a lot of people that don't fully understand. I wouldn't say I fully understand, but there are people that don't fully understand options, so I'm trying to make sure that makes sense. SMCI closing a little over 49. They've got 52s and 53s sold for this week. Pretty evenly split, 5,000-ish contracts apiece, 5.6 and 7.6% out of the money. Looking pretty good. New scale, that's SMR, around 37, right around 37.50. They've got 38 and 39, so pretty close. About twice as many at the 39, 1.3 and 4% out of the money. Not feeling comfortable starting 1% out of the money with a 101% IV. That means this thing is volatile and moves quickly. So we shall see. Maybe if it does a volatile move in the downward direction, we'll win those. Tempest AI, 56.88 was the closing price. They're 9% out of the money. Everything sold at 62, 7,700 contracts. They purchased puts. They split them up between 50 and 51. That just makes it a little bit cheaper when you buy a little further out of the money. Tesla, 313.51. We are starting in the money because we've sold 305s. So 2.7% in the money. The only thing we can hope for is a down week on Tesla. And Upstart's the last one where we actually hold shares. 75.62 was the closing price. They've got 82.50 and 84 selected as the strikes closing this week. We need to win the 82.50 for sure because that's 8,000 contracts compared to 500. They are 9 and 11% out of the money, so those are feeling pretty comfortable, at least for the start. Now we have two more of those debit call spreads. Actually, we've got a couple things here. So VRT is playing this a couple different ways. And sorry for trying to figure it out on the fly. So they've got, let's see, this 108 call goes with this 125 sold call. Okay, so for this trade, it's currently 12% in the money with the stock at 123. It really can only get better by less than $2 because 125 is the cap on that winning. So what they're counting on and hoping for is this staying right around where it is, maybe going up some, but not crossing that. So the value of this will decrease, and they can close that out for a win. Then they have 100s bought. They're even further in the money, $23 in the money. That's why it's worth so much money. And 122 and 120 are the combined contracts that cover that one. So we're already maxed out, beyond maxed out. So to win that one with the maximum gain, it would actually be for the stock to drop back down $3, which doesn't make sense. So we've got two bets at the same time, and to finish best case scenario for one of them, it needs to be around 120, and to finish best case scenario for the other, it needs to finish around 125. So we can't hit the perfect home run on both at the same time with the same closing date. So we'll just see how it works. It worked last time, millions of dollars made. So we won't judge. We'll just sit back and watch. And then Vistra Corp, same thing, but they only have one selected. Purchased the 180, sold the 202.50 and the 205 for the capping the upside. We want the stock to get to, but not cross 202.50. It's at 196.58 right now, so it's in a good spot. We could take another almost $6 of increase. All right, the value of all of ULTY, is $1,216,502,962.88. There was another increase on Friday, 250,000 shares, so we are now up to 196 million outstanding shares. The NAV is 619. The final trading price on Friday was 621, so it's within 2 cents. All right, now we'll get to the part you guys really watch this video for. We want to take a look at this past week and see what our distribution is going to be. So trades that we had to cover throughout the week, they start on $25.99. That's Monday, Tuesday, Wednesday, Thursday, Friday. We covered a lot of trades this week. So we went from line $25.99 to line 3,050. So we had a busy week talking about trades. We made $110,000 on Monday, lost $960,000 on Tuesday, lost $4.2 million on Wednesday, lost $5.6 million on Thursday, and made $7.2 million on Friday. That ended us up with a $3.5 million loss. If you watched any of the videos, you do understand, though, not all of that is actually lost, because to start a debit call spread, you actually put the money out in the first place, and then you figure out your winning at the end. So if we were only doing the collar strategy, this would just be black and white. Hey, we either won money or lost money trading, and hey, that's a big loss. But not necessarily the case. That'd be like saying when you buy a stock, you spend $10,000 buying a stock, you just lost $10,000. So I hope that makes sense. When we bought that debit spread, that was the investment portion. We're going to get the winning on the back end. But in any case, it's still a debit net loss for the week. So obviously, if we did our estimate, it would be in the negative. So divide that among all the shares. So we're not doing that one. So the backup plan, this is what generally has been happening. Share values increase and decrease throughout the week. Basically sat almost flat. At the end of the day, they did increase some. So the value increased by $675,000. So that's to say, if no one bought into or sold out of the fund, our total value would have increased over the week by $675,000, which it did, not would have, but it looks crazier than that because so many people bought into the fund that we jumped up hundreds of millions of dollars. But we didn't jump up hundreds of millions of dollars in value because of stocks. That was mostly from buying in. We jumped up $675,000 in value because of our investments moving up. So what we do with that is multiply the closing price by the IV. So thank you, ULTY fund managers, for giving us high IV. That's 81.02. And then we divide that out throughout the entire year, 52 weeks, and we come up with our IV estimate. That's 9.68 cents, very close to what last week's was. So what I did from there, I take that information and I give you my personal guesstimate. And so what I say, well, you can read it right there on the screen. I said 9.5 because I looked at last week and we had a similar week where we went up in value a little bit. We decreased from our trading value. And they actually paid us a little bit under what the IV estimate was, but while still staying close. So I think I'm looking at the same thing, roughly 96.8. My guess is 95. On Wednesday, we'll all find out together. All right, so that's for ULTY. Everything you've got, looking forward to it. I know some of you told me in the comments the only thing you guys are here for is ULTY, so if you're leaving, goodbye, thanks for watching, or maybe fast forward to the end so you can hear the dad joke of the day. I don't know. But for everybody else, we move on to LFGY. Now, LFGY we can get through a little quicker because there's about half as many stocks within the fund. So, but again, this one is not the rush video. This is the weekend video where we dig deep. Okay, so LFGY is not a collar strategy. Similar though, because they do own the shares. If you watch videos on the other YieldMax funds, or if you own them, or if you look into it yourself, you see they generally create synthetic positions where they sell a put and they buy a call at the same strike price, and that mimics the stock. Well, ULTY and LFGY, our weekly payers here, among others, actually own the shares. So and then they sell calls off of those shares. So it's a covered call strategy. Sometimes they will buy a call further out to limit the possible loss in case the stock runs past their sold strike. Other times they don't. They just sell the call and see what happens. But in both of these funds, ULTY and LFGY, they do not let anything go to assignment. So everything is cash settled. They are closing things out. So if you trade yourself, things aren't necessarily, if you owned BitDeer and you sold a $13.50 call and it ran up to $15, you're not paying, a ton of money to close it out. You could just allow the shares to get sold out from you. It doesn't have to be a loss. It only equals a loss in these because of the way they handle the fund. Okay. So BitDeer, it's 3% of our holdings and is a 99.9 IV, which is high, but it's so hard to believe that one's actually a decrease from the previous week. Now you will see LFGY is not as evenly allocated as ULTY. We've got lows in the 1%, we've got highs in the 16%, so we're kind of all over the place. This one is specifically crypto-related stocks and funds. So there's 4.8% in CleanSpark. It increased its IV to 81.1. And IV, just in case you're wondering, is implied volatility. And in layman's terms, it's just how big does it move, right? How crazy are the movements, right? So if you're like somebody that invests in like Ford, it was like $9 forever. I know it recently went to 11 over the past couple of months, but a stock that just doesn't move, where these stocks say, hey, we're up 10%. Oh, we're down 20%. That's what IV is. So the higher the number, the bigger the moves. Coinbase, this might be our biggest. We'll scroll through and see. Over 16% of our money, 67.2%. So we like when that's an increase because that's what is the majority of the weight coming out in our calculation. Core Scientific, almost 5%. It dropped some to 71% IV. Circle Internet Group, 3% of our money's in there. 97.4% IV is an increase from last week. Galaxy Digital, about 1.5% of the money is there with a decrease in IV to 88.4%. GameStop, which used to be, a crazy one, meme stock, it's now down to 50.8% IV, 2.84% of our holdings. Sorry, I'm going to take a drink real quick. Start getting weird voice on you. Robinhood, 6.8% of the money's there. It decreased in IV to 71.4. HUD 8 Corp, 5.4% of the money. 81.3% is a decrease in IV since last week. HUD 8 Corp's the one I just did. IBIT, we did not sell any options on it, so there aren't any extra lines for that, but we just own the stock itself. 9.3% of our money, so we like to see an increase in those bigger holdings, even though it's low. 39.2, an increase is still better than a decrease. Mara Holdings, 8.3% of our money in there, another increase to 75.3% IV. Mercado Libre, 3.67% of our money in there. That decreased to 42.80 for the percentage of IV. MicroStrategy, that's another big holding, 10+%. So unfortunately, that's a decrease to 50.4% IV. NU Holdings, about 3.5% of the weight. 39.3 is an increase in IV. NVIDIA, 2.73% of the weight. 34.9% is an increase in IV. Opera, about 3.5% increase to 45.2% IV. PayPal, 2.4% of the weight, increase to 44.5% IV. Riot Platforms, a little over 5% of the weighting, dropped to 73% IV. And finally, Block XYZ increased to 59.2% IV, and that is 2% of our holdings. All right, now looking at the options that are sold for the week. I say week or weeks ahead. We do have some, I believe, that are further out. Yeah, we have some that are further dated. Okay, so BitDeer has a single strike selected at $13.50. They did cover it with a 1550, so the most they can lose is $2 per share if this stock goes beyond their strike. But they're starting out 1.96% out of the money. Clean Spark has $14 chosen as the strike for this Friday. 6,400 contracts, 10.6% out of the money. We like to see that. That's nice and feels safe anyway. Coinbase, we're starting in the money already. 382.50, but there's only 33 contracts there. So that what's that, like 20 times less than the 400 position. So we got to win the 400 strike. They're 3.3% out of the money, where the 382.50s are 1.18%. So obviously, best case scenario would be to win both, but as long as we win the 400, it will make up for losing the 382.50. Core Scientific, single price chosen, 15 for this Friday. They're 19.9% out of the money. Now, on some of these, if you follow these videos, they start getting this far out of the money, they will actually buy and close them out. As you can see, these ended Friday costing 6 cents to close out, and the insurance for them cost 5.5 and 6.5. So basically, it would only cost them 1 cent per share on all these contracts to just close this position out. So we may see them do that and then sell closer to the money, say a 13 or a 14, to generate more income. So we do see that happen during the weeks. Circle Internet Group, another one pretty far out of the money to start, 18.77%. 222.50 is the strike chosen. Galaxy Digital has 2 strikes chosen. We need to win the first one for sure because it's 1,100 contracts compared to 48. So that 21.50 is 4.2% out of the money, where the further out is almost 11.5% out of the money. GameStop, everything's all on 23.50 with the stock at 23.33. That's only 0.73% out of the money. So we need them to trade sideways all week. Robinhood, starting in the money right from the start, ended over 98. We have 97 selected. They're 1.3% in the money. Hut 8 Corp. I was not paying attention there. That should be yellow. 251 contracts at 22. They're close, 0.78% out of the money. The remaining, the majority, 3,900 contracts are at 23. They're 5.3% out of the money. Again, IBIT, we don't have any options, so this could go as high as it wants to go, and it just increases our value. We like that, so go on up, IBIT. Mara Holdings, they've got 21 selected for this week, 7,300 contracts. They're 9.7% out of the money. That looking good. MBTX has a couple different things going on here, so we'll go through them. Each double is a pair. Okay, so we'll start with these first 2, and that is just a regular credit spread. We don't own any shares of MBTX. So it's a credit spread. We sold 260s. We bought 285s. So the way to win this is for the stock to end below 260. It's starting the week at 279, 7% in the money. This one hurts and is going to be a loser. You can see, because here's the combination. This is worth $187,000 in our pocket. This is going to cost us $1.1 million to close out as of close on Friday. So we need that stock to drop $19 to win that trade. Not feeling great about that. We've got another one. It's almost not worth talking about because we went from 500 contracts to 6 contracts. This is more like a fun trading. This is more like a personal trading, 6 contracts. But we'll talk about it because it's here. So this one's 295 is the sold, 320 is the purchased. So the stock, as long as it doesn't cross 295, this will be a total win. They're 5.4% out of the money to start the week. And then big picture, they are betting on it to go down. All right, so this is not a protective put. They bought the 230 put and they sold the 150. So that means, and this goes out all the way to December 31st. Likewise, the previous one we talked about is till August 15th for those 6 contracts. But this is 2,700 contracts. for this to win. So there was a time where this was worth $6 million. It's already down to $3.4 million. It's going to keep on dropping if that stock price does not get down towards that 230. But by expiration date, it has to be well below the 230, or else it'll just keep decaying away. So that's why we got it in blue, because we actually want that to go in the money to win that trade. But I didn't want to confuse you and put it, when it's in the money, have it red, because red correlates with bad. So that's why debit call spreads and debit put spreads are in blue, just to differentiate. Okay, Mercado Libre, they've got one contract here at 24.60, 3% out of the money. The other 24 contracts are at 25.70. They're 7.6% out of the money. The reason it's such a small number of contracts is because each share is like $2,400. So it's not as easy to have a whole lot of contracts on those, because each contract's worth 100 shares. MicroStrategy, they chose 450 and 460, pretty evenly spread, right around 200 contracts each. The 450s are 3.5% out of the money. The 460s, did I say 350? The 450s are 3.5%. The 460s are 5.8% out of the money. Not bad. I think over on ULTY, the first position was already in the money. NU Holdings, everything's on 1350. No, as I look at it, most of it's more than 10 times as much at 1350. So we need the stock to stay below 1350. It's currently 5.2% in our favor. The 14 is 9% out of the money. NVIDIA, they are sitting real close, 164.90, strike of 165. So this stock basically needs to trade sideways. And then this is a perfect example of time value, because currently this is 8 cents away, so it's practically at the money. If it ends this coming Friday, the 18th, at that price, the value of this goes to zero. It's currently $2.80. So that is pure extrinsic value. That's pure time value. The value of this week of this option is $2.80 per share, 100 shares per contract, 277 contracts. That comes out to that 77,000. Okay, Opera, 1844 is where it closed. 20 is the strike. There's no top side to it, so they kept more of the profit because they didn't buy the insurance policy. But if the stock runs past 20, they're going to continue to pay dollar for dollar until wherever it stops. So that's almost 8.5% out of the money. PayPal has 76 selected. They're 6.5% out of the money. That seems pretty good, especially PayPal's not a real high volatility, 44%. Riot Platforms, 12.42 was the closing price. 12.50 is where the calls are sold at. That's 0.64. Again, that's 8 cents. So practically at the money. So a week's worth of time in Riot is worth 45 cents, where a week's worth of time in NVIDIA is worth $2.80. It's also going to be like a percentage relation to the share price, right? The strike price, $165 stock moves 8 cents a lot faster than a $12.50 stock. But they're 0.64% out of the money. Not as big of a deal if we lose those, because it's 400 contracts compared to 6,500. So the 13s are what we need to win. They're 4.6% out of the money. Finally, last one, Block, is everything's on 71 as the strike price. The stock closed a little over 65. They're 9% out of the money. Not bad. On Friday, there were 50,000 additional shares purchased, bringing the outstanding shares up to 4.2 million. Net assets of $167 million. And the NAV, this is probably the biggest gap I've seen in NAV on LFGY, really when things are settled. When we're looking at it throughout the week, there's a delay on one or the other. But so nothing's delayed here on the weekend. So to be, 18, 23 cents off, that's the biggest difference I've seen. So the only answer for that is just people are willing to pay a little premium because they wanted to get into LFGY. So we had an increase. And that actually helps us for calculating our our distribution, right? So if it were 39.82 times 63%, that'd be a lower estimate than 40 times 63%. So let's move over there. Trades for this past week. It's not quite as many as ULTY puts us through, but it's still a decent amount. 1428 was the starting line. Monday, Tuesday, Wednesday, Thursday. I don't know why I forgot to highlight those dates. And then Friday. And I gray things out after we talk about them so we don't repeat anything. 1692 is the final line, so that's how many trades we made throughout the week. 1692 minus 1428. If you want to do that quick math, I don't. Trading throughout the week, we made 146,000 on Monday, made 500,000 on Tuesday, lost 732,000 on Wednesday, lost 881,000 on Thursday, lost 1.1 million on Friday. So that is a total loss of $2 million throughout the trading week. We did have, I think MBTX was the only one where I talked about a debit call spread. And we've had that one. I mean, we've added to it. But so a little bit of that $2 million is actually, invested money where we're going to take the win later, but it's going to be much later, and it's not that very big of it. So most of that $2 million in losses is just because the stocks went up. So if you're kind of new around here, we've explained it a lot, but I still get lots of questions as new people come in. Why are we losing money on trading if this is supposed to be making us money there? If you watch the interviews with them, they're actually okay with this, because if the stocks go up and it makes us lose a trade, then the value increase covers that loss. The fund goes up in value, and then let's say the stock ran up to $41, but we lost our trades. Well, if they gave us $1 payout, we'd end at 40. At 40 is where we're used to being anyway, and we're still good. So not that big a deal if you're losing trades because of making money. Now, it was a kind of a funny week because you would go up in value, you'd lose the trade, you'd pay to close it out, and then the next day it'd go down in value. So then we only ended with a $622,000 profit. I want to say that was fairly similar to the ULTY one. So 600,000 compared to 167 million here is a whole lot different than compared to 1.2 billion over there. So, but all in all, we know that this first one's going to be a negative because we lost money trading. So if we made money trading and it was enough to cover what they like to pay us, we'd just be looking at getting paid out that way. If not, the fallback is to pay and a yield that equates to or is really close to the implied volatility of the underlyings. So with that, it would be 48.65 cents per share. And so I take that information and came up with my own personal guess. And again, similar to last week, so I think it will be close to, but not quite, since we're kind of trading sideways on the fund over the past week, so we don't have a lot to pay out that way. We're losing money on trades, so they want to pay close, but I think they're going to pay 47. So, okay, that is all the information I got for you. This is the longest video I have made. If you stuck around till the end, I appreciate it. If you fast forward to the end, that's fine too. Got the dad joke of the day. So just want to thank everybody. If you didn't catch some of the videos I put out this weekend, obviously Friday's closing trades on ULTY and LFGY if you were interested in that. Friday's closing trades and estimate for Round Hill funds, QDTE, XDTE, and RDTE. And then if you follow any of the 7 listed income strategy funds here, I cover them on a weekly basis. And then I let you know my own personal trades just in my trading account, and my dividends that I collect from owning some of these different funds, as well as I gave an update thanking everybody. Right, we've hit both goals of over 1,000 subscribers and over 4,000 watch hours. So I've now been approved in the YouTube partner program, so I'm able to start earning income from YouTube. So now when you guys watch, you're helping me out. So I appreciate everybody. Thank you all so much. And I hope you like the content too. So I keep on trying to give you the best thing I can. So dad joke of the day. What do you call two monkeys who share an Amazon Prime account? Primates. That's a pretty good one. Okay, hope you had a nice relaxing weekend. Enjoy the rest of this weekend, and good luck trading tomorrow. Catch you in Monday's videos. Goodbye.